If you've been keeping up with the latest financial news, you've probably heard the term correction. It's being used to describe the current market.
And you're taking a look at the live picture of the Dow Jones right now in the green. So what does that mean for your money and investments? Here to explain is private wealth advisor with Ameriprise Financial, Trevor Shakiba. Great to see you.
Yeah, how are y'all?
We love to see the green arrow.
Yeah.
That's a good thing. But we have officially hit the correction stage, right?
Well, you know what's interesting is when I put this together last week, we were in a correction. Now we're no longer in a correction. But still, this is good. We were in a correction. What does that actually mean? It means it's a 10% pullback from where we were or more. One of the other points we're going to get into is that's not any reason to panic. That's normal. Look, there's three reasons. Whenever you hear volatility, you should immediately think uncertainty. And so right now we had that, or we did have that, because of interest rates, because of trade with China. And then the big one, which is going to be solved tomorrow, was uncertainty with midterm elections. But I actually have a really interesting statistic here for the viewers. Remember, all elections are going to be uncertain. That just goes with it. But the last midterm election, after which the market was lower 12 months later, took place November 5th, 1946. Oh. I think that puts it in really good perspective that, yeah, we have uncertainty right now, up and down, but no reason to panic.
But isn't that uncertainty, Trevor, though, isn't that part of the market? I mean, if you have money in the stock market, you'd be foolish to assume that there's never going to be volatility.
Well, you are preaching to the choir, Derek, but remember, when money is involved, it's emotional, especially when you are close to or in retirement and you see your account balance is down. So I understand it and I get it, but yeah, you need to have the right expectations there, especially coming off last year, which I think is my next point, where the market just went up every single month. We may have had a 3% pullback. That was an anomaly. The fact that we've had a couple corrections this year is much more the norm.
And you also say to have kind of the billionaire mindset, right? Have the Warren Buffett kind of when you're looking at your portfolio, right?
Well, I think what you want to do is think like a very successful investor, like Warren Buffett. So he typically talks about being greedy when others are fearful and being fearful when others are greedy. Remember, you don't want to be doing what everyone else is doing when it comes to investing. So don't take advice from a coworker or just be careful where you get your advice from. My main point here is remove emotion as best you can and think long term.
Okay, and so that's what we should do. I mean, you just mentioned people who are approaching retirement age. They may be particularly worried because they want to ensure they have enough, but you say remove the emotion. What else should those people be doing?
Well, you definitely need a financial plan, and remember, you need to have an investment portfolio that's different when you are accumulating money, because when you're, making as much as you can and saving as much as you can, that's very different from preserving income and growth as opposed to just growth. So there's ways that you can diversify where you can take out some of the downside, but at the same time, you can't get too conservative and just put it all in cash or CDs as well.
And I know you kind of touched on this already, but as far as like kind of don't follow, for Warren Buffett, you're kind of following what most people are doing or not following what most people are doing. Is that what you talk about, like timing?
Yeah, and so my point here is that whatever you think the answer is, it is not market timing, okay? Because remember, you have to get two things right, and everybody forgets about this, is they let their emotions take over, and then all of the negativity, and then they're gonna get out before it drops. But when do you get back in? You have to get both of those things right, and that is impossible. So that's why I'm always talking about have the right allocation, stay the course, and think long term.
And Trevor, we're out of time, but you say what we do right now is critical.
Yeah, because right now it has been volatile. October was not a good month. We went into a correction, clearly. But if you get out now, that's going to definitely negatively affect your long-term rate of return. So in these periods of volatility, it's what you do now that's really going to determine how successful you are.
Don't jump out of the market, folks.
Nope.
Trevor, thank you so much.
Yeah, thank you.
Great to see you. And to start investing with Trevor and the Shakiba Group, visit their website, theshakibagroup.com.